Hello and welcome to the November edition of the Markets in Three Charts, where each month we present some of our current investment thinking in a social, economic, and share price chart. So in this edition, we're focusing on childcare, as the H&G High Conviction Fund has been increasing its holding in early education and care group, Evolve Education, which has around 135 childcare centres across Australia and New Zealand. And as always, please note what we're presenting is general insights into our decision making, not investment advice. So, our first chart, which is the social chart, shows incentives to join or increase participation in the labour force. And these stats are taken from the ABS in the 2018 to 19 financial year. And what you can see here is that even before the pandemic, lack of access to childcare was reported as a major reason why people were unable to enter the workforce and or increase the hours that they worked. And what's interesting is the ABS's survey, which was on barriers and incentives to labour force participation, found that the most important incentive for women was access to childcare place. And in this case, 52% of women rated this as very important. While for men, it was financial assistance with childcare costs, and that was about 37% of men who said that. So, what's interesting as well is that this contrasts with what the Australian Children's Education and Care Quality Authority found in their latest industry snapshot of childcare. Is that the growth rate for new long day care facilities has actually been declining in Australia over the last 3 to 4 years. So, what impact is that having on childcare prices? Chart 2 shows this pretty well. And as you can see, it's a pretty dramatic looking chart. And what it's doing is the orange is childcare costs, and that's being compared to the blue, which is the entire CPI basket, so general inflation. So what we can see is that obviously with the cost of living increasing, and also real wages remaining subdued over the long term, interestingly, the need for two household incomes in turn actually increases the demand for and subsequently the cost of childcare services. So the thing to really talk about here is what are these vast swings that we're seeing in the childcare price inflation. So as you can see by our annotations, at any point where childcare has really made a substantial deviation from total CPI increases, where childcare prices have gone through the roof, the Australian government has actually intervened and taken steps to increase the affordability of childcare for parents. So the first one we can see is in 2007, when the Rudd government introduced the childcare rebate and actually increased this amount in 2008. And this operated as a tax credit on parents' income tax. Then in 2018, after the price of childcare had got away, the Liberal government redeveloped the system to actually replace the childcare benefit and childcare rebate with a single means-tested subsidy. And this is paid directly to childcare service providers, which is then passed on to families. And you can see this crazy movement in 2020 during the pandemic, when a relief package was paid directly to childcare service providers, which actually reduced childcare costs by 95%. And what's really interesting here, in terms of all this government intervention, is you can really see the flow-through effects of childcare to the rest of the economy is just so important as a sector for the functioning and quality of society and allowing people to work the hours that they want to work. And the latest budget of the Australian government illustrated how important it was by allocating $1.7 billion in spending on a new childcare subsidy. And the commencement of this subsidy was actually even brought forward subsequently to that by 4 months to as soon as March 2022. So the third chart is the share price of Evolve Education Group over the last 7 years. And for disclosure, H&G High Conviction Fund has 5% of its capital allocated in shares of Evolve Education, which is dual listed on the ASX and the NZX, and our average cost price is 72 cents, and we began accumulating in July 2021. So what are Evolve's assets? The company owns 135 childcare centres, with 111 of them in New Zealand and 24 in Australia. Evolve began with a portfolio of centres just in New Zealand, which is called Lollipops, and over the last 2 years acquired Australian centres in Queensland and Victoria. And well, the big question is really what's driven this quite wild share price performance over the last 7 years. So since listing in 2014 at the equivalent of $8 per share after consolidations, the stock has, as you can see, been a significant disappointment considering the current price of around 86 cents. And shortly after Evolve's IPO, the company had a series of profit downgrades, and this was largely due to declining occupancy rates across the group's childcare centres, and at this time solely in New Zealand. And it's possible that these occupancy rates declining was a result of an overly corporatized model and the kind of friction that can then happen between the head office of a corporate like Evolve and then individual centres. And it's a classic story. So then in 2018 to 19, Evolve was recapitalized and restructured, which involved the selling out of the founders and the introduction as the managing director of a man named Chris Scott, who was the former founder and MD of ASX listed G8 Education, which he built from several $1 million to in billions of dollars in market cap. So having personally invested a significant sum into Evolve, Chris then initiated a turnaround in New Zealand and began an acquisition strategy in Australia. And this led to the beginning of a positive share price reversal that you can see starting in 2019. But this only lasted until COVID-induced lockdowns in New Zealand and Australia that severely hampered the childcare sector. And you see a repeat of that in 2021. So what does the future hold? Well, with Australia and New Zealand now committed to a COVID strategy of management rather than elimination, and therefore the chance of lockdowns much slimmer, the childcare sectors in both countries have a really important role to play in boosting employment post these lockdowns. Now, we've already noted in the second chart the role of the government in supporting the sector. But in the private sphere, there's also increasing institutional interest in childcare. So Busy Bees, which is backed by the Ontario Teachers Pension Plan, recently acquired 75 centres in New Zealand and 36 in Australia, while Quadrant Private Equity acquired 150 centres in Australia. And such acquisitions have been on multiples of around 10 times EBITDA, compared with Evolve's current forward multiple of around 6 times. So given the really favourable industry dynamics and interest from these large institutions and Evolve's very modest valuation, we believe the market has overlooked Evolve because of its unstable past, and we look forward to seeing the company progress and being long-term shareholders. Thank you very much for watching, and I will see you next month.